Are you worried about paying inheritance tax? Watch this video of how I show you how to mitigate it altogether. So this video has been made to help those that have an inheritance tax problem. Indeed, the HMRC are happy to tax you when you're buying products, when you've got a house, when you're driving your car, but they're not done with you even when you're dead. They want another 40% of your assets. How do we stop that? Well, that's a good question. There are a lot of slides to get through to, so let's go ahead. Okay, so let's now look into the details of passing assets to your loved ones whilst avoiding inheritance tax. The thing I would say straight away is that we need to understand the basics of what inheritance tax really is all about. You can go onto the .gov website. The URL will be shown just below the video, but also on screen now, for you to get a better understanding of what HMRC want from you when you pass on. I'm going to give you the basics though, and a bit more of the advanced stuff in this video, so it should take less time for you to absorb and consume. Let's understand the basics. So the first one is the IHT ban starts at 325,000. What does that really mean? Well, hold fire. We'll go through an example later on. But 325,000 is the net assets that you can have in your own name when you pass on that would be free from inheritance tax. Anything in excess of that 325,000 for an individual will be taxed at 40. Yes, 40%. That's crazy and ridiculous. I empathize, but that is the rates that we have to work with. If you're a couple, that would extend to £650,000. Now there is a nil rate band. There is a slight calculation which we need to go into detail on, but that can give you an additional £175,000, which if you add that to the £325,000, that is £500,000 of inheritance tax allowance that you can obtain. Again, if you're a couple, this is whereby you could have an estate of value of £1 million and it would still be free from inheritance tax. So as I mentioned, there's 40% tax on the excess of that 1 million as a couple and 500,000 for an individual if you've got the home nil rate band. And there are some exemptions which we need to apply and consider, which you can think about now to prevent this inheritance tax liability coming to fruition. So let's just go through what IHT is, and that again, just continuation now of the basics. All assets are taken into account, but there are some things that you can withdraw. The first one is debt. So if you have net assets, but you've also got mortgages, loans and credit cards, well, they need to be taken down from the gross assets that you have to get you the net asset value. We'll go through an example later on just to help your understanding on this one. You could have business assets which are not investments. So on that side of things, you need to consider, is it an asset used in your business, or indeed is your business a trade activity? I will go through examples of that in more detail later on. And finally, you've got investments as well. So if you've got investments such as pensions, that will be free from IHT because it's currently protected. So that's a good thing about pensions. But again, let's go through an example of how IHT is calculated. So I've created an online portal where it'll help you to understand how you can save SDLT when you're buying a property, value added tax when you're buying a commercial building or indeed refurbishing a property, the income tax and corporation tax that you can save when making profits on your property portfolio. So make sure you enroll today and start learning how you can save tax on your property portfolio. And what I want to do, I want to compare 3 different people. So we've got Fred here, Janet and Sarah, who have got a mixed portfolio of different types of assets. So you've got Fred, who pretty much is a buy-to-let property investor, and that is all he does. You've got Janet, who is not a buy-to-let property investor, but considers her home as an investment for the long term, and she's got some pensions as well. We've also got Sarah, who is got a home, a nice home, but she doesn't have any buy-to-let property investments, nor does she have a pension. In fact, she has got a trade business activity, whether it's professional services or selling products. Ultimately, all of them have £1 million worth of assets. And if you look at it on the face of it, you would think that their IHT liability will be the same. Hark! No, that is not the case, and we need to go delve into the details. Before that, if you do have any questions so far already on my content, then make sure you type in the question in the comments box below, and I'll get back to you as soon as humanly possible. I want to take Fred now into consideration. So Fred has got gross assets of £1 million, but we now need to reduce those gross assets because he's got a home mortgage, a buy-to-let mortgage, and that's it. He doesn't have any business assets, nor does he have any pensions, as we said before. So his gross assets has gone now down to £320,000 to net asset value. So that £320,000 is going to be subject to IHT, is it not? Well, you'll notice straight away it's below the £325,000, never mind the home or the residence nil rate band as well. So he should be free from IHT. We've got Janet, though, who considers her home to be an asset. She's got £1 million worth of home value, and she's got some pensions worth £150,000. Now, when you look at it, we're talking about the gross assets. We've now got to reduce those gross asset values by that £150,000, which will be disallowed for the IHT calculation. So basically, she's got £850,000 now worth of net assets that's chargeable to inheritance tax. And you should be able to see that, well, hold on, is she likely to have an IHT liability? Yes, she will. We've also got Sarah, who, again, has no pension, has no buy-to-let property investments. In fact, she's got a trade business, has selling professional services or indeed products. You'll notice that she's £1 million worth of assets, but she's got a home mortgage, £300,000, and she's got a business asset valuation of £400,000, which basically means that she's now got a net asset that's chargeable to inheritance tax of £300,000 in the most simplest of terms. So again, £300,000, you should be looking at that number and thinking there's no IHT liability at all. And you would be right. So what we've done, this is a summary page now of Fred, Janet and Sarah of all the assets that is going to be subject or not subject to inheritance tax. Again, just to repeat, Fred's got £320,000, Janet has got £850,000 net assets, and Sarah has got £300,000 net assets which are chargeable to inheritance tax. But don't forget, we've got this nil rate band, which is of the RNRB, so residency nil rate band. And that applies, basically, it's the lower of your net asset value. So your gross asset value less your mortgage gives you the net asset value of your home. And it's got either that value or the £175,000 if that is less. So the nil rate band for residency nil rate band, should say, is coming into effect from April 2020. So you will have this £175,000. But again, you've got to look at the net asset value. So if you look at Fred, who's got a decent sized mortgage on his home, you'll notice his net asset value is £70,000 on his home. The nil rate band, therefore, is the lower of the £70,000 or the £175,000. So he has got a residency nil rate band of £70,000. The lower is inheritance tax. To be fair, it does not affect Fred because he's got no inheritance tax liability anyway. Janet, her residency nil rate band, well, that is £175,000 because she's got £1 million worth of assets. Sorry, her home is £850,000. And that is higher than £175,000, so that is clearly £175 residency nil rate band that she could utilise. And similar to Sarah, she's got a £300,000 asset greater than £175,000, so it's the lower of the two. She carries forward that residency nil rate band to reduce her inheritance tax liability of £175,000. And this is how it looks. So we've got let's take Fred, for instance. We know that he's got net assets on £320,000. He's got his lifetime IHT allowance of £325,000, and he's also got this home nil rate band of £70,000 as well. IHT deductions, £395,000. He has no inheritance taxable at all, so no issues for him. Janet, though, has got £850,000. She's got an IHT lifetime allowance of £325,000 plus the residency nil rate band of £175,000, which gives her the IHT deductions of £500,000, giving her, which is chargeable to inheritance tax of £350,000 at 40%, is £140,000. A lot of money, I'm sure you agree. And Sarah, conversely, on the other side, £300,000, mainly because of business assets that she's got, and I'll talk about that later on. But she's got IHT lifetime band of £325,000, less the nil rate band, £175,000. She's got total deductions as well of £500,000, but ultimately no IHT taxable charge at all. There's a lot of content, and I appreciate that, and I have tried to simplify that as much as possible. But if you do have any questions, make sure you type those freely into the comments box, and I'll make sure I'll get into the detail and answers for you as soon as I can. I want to now talk about ways of reducing IHT, and these are legally done, so you'll notice I'll give you the legislation references for this. The first two is not something I'm going to go into details for because we've kind of covered them off. But if you raise debt against your assets of any type, then the debt reduces your gross asset value to come to a net asset value, and therefore you may not be subject to IHT. And I had a couple that came into our office recently, into the Nottingham office, who has a IHT liability. And one of the things we just said is, well, why don't you enjoy life, mortgage some of your assets, because ultimately you can afford to do so, and raise your IHT deductions and just live life and enjoy it. I think we sometimes worry about our siblings and looking after them. Well, ultimately, you should be looking after yourself because you're the one who grew your asset base in the first place. So why not enjoy yourself? The second type of investments you should be looking into, but I'm not a wealth manager. I'm not an IFA, so make sure you get wealth planning advice from this one, is pensions. You can invest into pensions, you get tax deduction from that contribution you make, and it sits outside of IHT as well, so a great bonus for you to consider. You may have business asset rollover, so if you've got a trade business, as we've said, selling products or services, then you may be able to get a IHT reduction, and no less, which we will talk about later on. Finally, we can make gifts as well, and we'll talk about gifts in the next couple of examples. But we're first going to talk about business asset transfers. And business relief or inheritance tax may be seen on this website URL, again, .gov.uk, where it talks about your business assets and what you can roll over to the next person so that you can reduce your IHT liability. Here's a couple of things you'll need to note. There are some things that will part of your business which will be 100% allowable. Then there'll be some things that are 50% allowable as part of your business, and there's some assets in your business that won't be allowed at all. So here's an example whereby you've got a business that's got a building, it's a commercial building, an office, you've got staff that work there, it's owned by the company. That business is part of the trade activity and therefore will be allowed. You may have a valuation of goodwill in your business, and because it is got a value of goodwill, which means if you sell it, you should expect more than just the net assets, then the entirety of that amount will be allowed for an inheritance tax, provided they are going to continue with that business. However, you may have asset, which is a commercial building, an office, and the office is owned by you as an individual, and the business is renting it from you. So the limited company, as an example, is renting the building from you as the individual. And that building would only get 50% IHT reduction. So straight away, one thing I would be saying to you is if you've got any assets that you are renting to your business, it may be better just to sell it to your business for it to get 100% IHT write down. If you've got a business that has got shares and it's a listed stock exchange share, then the shares would get a 50% reduction as long as it's a controlling share of that business. So 50% or more importantly, 51% is a controlling share. So 50% would be allowed of those net asset values. However, if you've got loans to other companies that you own, or indeed other people's limited companies, or you've got an investment such as a buy-to-let property, or indeed if you've got a property like a service accommodation, you may not be able to get IHT reduction no matter what you've heard. The other side to it is that you've got companies that are not for profit or being sold or wound up. You will not get 100% tax IHT deduction. You will not get a 50% IHT deduction. You'll get naught, zero, nada. So you have to be very, very careful when you're looking at inheritance tax, what type of assets you have in your company structure, to think about, is this going to be subject to IHT or is it going to be IHT exempt? You have to get a proper valuation done on your business. And I would say at this point, I would start to think about your mix of your company and think about ways of switching it around. So if you've got investments in buy-to-let mortgages or buy-to-let properties, I should say, then how about using buildings that you have as part of your own business? So you might need to take tax consultation on this one, because IHT can be a huge amount of issue, and that is on business asset transfers. So you could save yourself 40% if you do it right. Again, if you do have any questions on that, it's a big area and I do appreciate that. If you do have any questions, then feel free to type those in. Maybe things I've missed off with the description or clarification. So make sure you get those questions. I'll do my level best to get you the answers as soon as possible. And finally, to reduce your IHT from a basic level especially, we're talking about gifts to loved ones. And again, don't forget, if you want more details, then you can look at the .gov.uk website and have a look at IHT gifts. Again, I've given you the URL so you can have a look at more details of that, and you can look at that at your leisure. The thing that you can do is you as an individual can make gifts to anyone at £3,000. Not really worth considering, if I'm honest. Well, it's worth doing, but really, who keeps a track of £3,000? I'm sure most people give their kids or whoever gifts of more than £5,000-6,000 a time. We talk about cars and even laptops, which is going to cost more than that sometimes. So these gift allowances that you're seeing on your page, this is just the blurb from the HMRC's website or .gov.uk website. In all honesty, they are so piddly in amount. It's something we should kind of talk about, but very, very short, brief time. The more important thing is giving your assets away. Now you can give your assets via a gift, a straight out gift. So your home, your cars, your paintings, those kind of thing. Or you could give up your business right now. But you do need to think about the 7%, the 7-year rule. So if you've made a gift, let's say it's a home that you lived in, and you said, right, okay, we're going to downsize, you take the home, kids, and do with it whatever you want. If you passed away within 3 years, you can see that the tax rate is still going to be 40% on that net asset. So pretty much it's saying that if you pass away within 3 years of that gift, you will still be subject to the full amount of inheritance tax. So you need to be aware of that. And as you can see on your screen, the valuations go down in terms of the percentage rates of tax. So when it comes to 7 years or more, you will not pay any inheritance tax at all. Now, we do need to think about a couple of things here. First of all, you could gift the property outright, but you need to be very, very careful with things like gift with reservation. What do I mean by gift with reservation? Well, I'm glad you asked. Gift with reservation is this example. Let's imagine that Shelley is a mum. She's got 3 children and she's got a house worth of £500,000. She says, well, I'm going to gift you this house for free. I don't want any money at all. It's yours. But she lives in the property and does not pay any commercial rent. That is a major, major significant problem because it's a gift with reservation. I'm gifting you this asset, but I'm living with it in the property. Well, that's hardly a gift then, is it? Because you are still benefiting from that asset. So you need to be careful. If you are going to gift something away, you need to be very careful that you are not benefiting from that. A nice example where HMRC caught someone out with this one is it was in court where someone had a painting, gifted it to the children, but then loaned it back to themselves for less than market rent value, and then kept it in their own house. Well, that's a gift with reservation because they did not pay a commercial rent for that painting. So it doesn't matter what type of asset it is, it could be anything. But if you've got a gift with reservation, it will be clawed back from inheritance tax calculations. So be very, very careful when it comes to that kind of charge. And again, there are some nice examples on the website that talks about how assets will be clawed back. Feel free to go onto the website for that, for more complicated examples of inheritance tax and how that will be calculated. And that will give you an idea of what to do and how much you'll pay. However, if it's too much detail, you can book an hour with me, talk about inheritance tax planning and how you can avoid it. You can upload your questions with me before the call so I can identify the solutions. The more details you provide me, the more solutions I can identify. You can book that 60 minutes with me using the YouTube 25 coupon and you'll get a 25% discount. If you are a buy-to-let property investor or a property developer, then you may want to be talking to us about our services. Go to our website www.optimizeaccountants.co.uk and book a free consultation call to find out how we can help you. My name is Simon Misiewicz from Optimize Accountants again, and I shall see you on the next video.